The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Conditions Hour, 11 o'clock till noon every single market day, 877-927-6648. And thanks to John, to Steve, to Larry, to Tom. Just a great bunch of hosts that we had here. And of course, I hope to give you some added information in this hour. And we'll be looking closely at the Dow, the minis, a whole bunch of things. And not only that, this programming all the way through. Today is Thursday, so you've even got Andy Hecht coming on. You got Dave White. You got Daryl Martin. Whoa, a full house. In fact, today is the full house. So let's go to the numbers, and thank you, Steve, for a great show. Great lead-in, I must say, and have a good break. Now, let's just talk about the Dow. There's a pattern that we saw back in 2008, at the very end of the last quarter of 2008. There were times when the market had an unbelievable set of parameters. Those are days where you had 800 points, 1,000 points up and down, up and down. But the pattern that unfolded was very unusual in that what you saw was that every other day, there was a different directional move. The trend was at that point down, so you made lower lows and lower highs, but boy, you could get a spike to the upside. I remember there was one day where there was an 800 move, 800-point move. This is a down move. What we're looking at now is everything in microcosm, with a very gentle uptrend unfolding in the Dow. You see this up channel? We tested 3 days ago, we tested that green dashed line, the Chapman wave inside track support propellant zone. We saw a test on the upside when we went into the Chapman wave inside track of the channel resistance repellent zone. And at this point, I still have to have, just for maybe another day, a bifurcated move is unfolding between different sectors and different stocks within sectors. And I'm still calling this, at least for now, B/F. There are many signs that say it should be an F, and it's under the 200, the 9-period moving average, the maroon line, the Dow. At this point, this is what I give my subscribers every day. Very comprehensive look at the Dow, and then, of course, all the other indices that are important, etc. But what's really important here is that the low that was made at about 17,990, was it? Yep, exactly, 17,990 on the 26th. You see that candle, and when I was interviewed by Tom, I said, Tom, there is a history here of having alternate when there's a very strong down candle. Look at these very strong down candles. They were followed the very next day by an inside bar. There again, inside bar. There's the opposite, big white candle, inside bar with a down candle. So that alternation is very important. So for my subscribers, we've been only to the long side. We have a potential switch going on if certain things happen, and we'll go through it at about 11:30 exactly is where we want to be looking at certain parameters. But most importantly, what we can do, and I need to change that cup formation to right there. Yep, that would be the vertical line that I'd be looking for. So you see the MACD is negative. See the stochastic's negative, even with that very strong movement that stopped yesterday, that bounced, that stopped right at the 9-period moving average. So there's a lot going on here within each bar, with each candle. There's just a chunk of things. So here's what I'm going to tell you. I'm going to pull this down and show you that in my quintile with my 5 little charts that are always shown in my overview market today section, I showed that we've made in the 120-minute chart a peak D at 18,351 in the Dow. You had a Chapman wave. It's the trend gauge that I use, Richard Arm's gauge. I use it only for two reasons. One is to look at the numbers, and one is to assess the numbers. I suppose it's the same reason. As opposed to the way that Richard Arms uses it, that's fine. It's just an indicator. And what it had said 2 days ago was intraday that there would be, within 2 days, it should be a really sharp move that starts in the E-minis, the S&P E-minis, and then should be translated into the cash indices. Sometimes it all occurs before the market opens. By the time the market opens, yes, there's a move to the upside, but it doesn't fully extend to the cash index in the same way. Yesterday, it not only participated, it led a fabulous move to the upside. However, what we're looking at is that there was a chance to gap down here in the VIX index. The 120-minute chart made a very strong spike from the 1209 area to the 14.43 area, and then it pulled back, and instead of gapping down today, we've seen a little bit of a reversal and gone back up from the low yesterday of 1305 to a high today so far of 1397. My suspicion is that there is still, based on a couple of factors that are going on right now, my suspicion is that there's a chance that, in fact, we will have a rally a little later on, and that rally will suggest that we are still in the sideways trading range. So let's get to the numbers, and I'll do the numbers with the charts. So the E-mini down 650, very nice candle after yesterday's move. Today's not a bad candle inside day so far, but that 9-period exponential moving average at about 2116. That you need to see the E-minis within, I'd say within the next 15 to 20 minutes, start to tackle the 2114, starts to tackle the 2116s, and this resistance line right here at 2125. That's the major key. That is absolutely the key. You see the 120-minute chart. Let me show you something absolutely fascinating here. Based on the Chapman wave methodology, using all my different techniques, made a peak D at 2134 round number high back on the 19th. And then what happens is you come down, have a single leg up at some point. I don't remember where it was. Just before the close on the 20th. That didn't work because later on you pulled back and you went down to 2115 round number low, ran all the way back to a peak C minus, which because it failed at 2130.75, made a very big arch formation, struck the 200-period moving average with such force that it kept going down, went all the way to the 2096 round number low. We then had a fabulous rally from early morning yesterday, 26, Sunday night, whatever it is. Let me just check. Well, today's the 28th, Thursday, Wednesday, Tuesday. Tuesday we started a fabulous rally and went all the way to this downtrend line at 2124.25, pulled back, held the 200-period moving average, which wasn't even support before, wasn't even resistance. Now it's become support. I drew this in with a nice thick line for my subscribers. Every day I show the E-minis. Sometimes I show it in 3 views, but usually it's at least the daily in the 120-minute chart. The reason why I always show the weekly, have for a while shown the weekly, is we wanted to see if that weekly was going to make a new high, which it did at 2134. That's leg E. A potential peak E, if by tomorrow we don't break 2134.25 to start an extension of leg E. Otherwise, it's going to be a peak E. But what is important about this is that, what is important, I get that chart right back, right there. It's important is that this rising wedge formation next makes it 211.1675. Someone must have heard us. And in fact, I'll go through something else in a few minutes. Look at the way this chart has made a beautiful move to the upside, pull back, made. I'm going to make a couple of designs here, but this is like Technical Friday. I want to do it right now because it's just so important to get this done. The lines that I'm drawing right now, and I'm going to expand this. The lines that I'm drawing right now, it's a particular pattern in my Chapman Wave CD. It's called, well, I actually wanted to talk about the H pattern, the lowercase h pattern. Do you think I'll find it? Slide 337. 337. I'll just write it down. Good. Now we can go to the chart that the chapter that I call the falling axe formation. And that falling axe formation is chapter 24. Let's go slide down here. Chapter 24, there it is. Chapter 24, click. Falling axe. It's actually just a declining cone formation. And it implies the axe pattern resembles the shape of a falling axe with a diagonal long handle. The blade consists of one downtrend line joining lower highs and a deeper trend line joining lower lows, thus forming an expanding wedge or X blade formation. And what do? We look at the pattern, and what do you see? That's the pattern. Actually, this is an even better one right here. It's a deeper pattern. And then what happens is if it breaks to the upside and breaks the trend line, it goes, first of all, to the left side high bar where you started those lower lows. And if it does that, it can go one-to-one to the upside or even higher. So let's get out of this, and I'll show you something. There's a long way to go. We're at 2117, 2117, 25, 2117, 00, 2117, 50. Nope, 21. Anyway, this is the line that we're looking at right here. You want to break 2119, 25. You get above that. If it's today, that's spectacular. I don't think it can do that today. But if it does that by tomorrow without breaking down, it would suggest that the long positions that we have in my opening call, which held exactly this morning, I emailed, well, a couple of things going on. There's a question, and the question is, how come this morning in your opening call in the trader's corner, you suggested that the long position, you lower the stop just until 10 minutes past 10, and immediately at 10 minutes past 10, put it right back to where it was for a break-even trade. What kind of thinking is that? Hey, wait a minute. There's another one. At 11:30 this morning, you said, if the Dow is at this particular level, then you should be going to the short side. Or what about your long positions? Well, if I'm to the short side, it means that there's a real good chance that the short side will be taken out real quickly, and we will only have one position. We will not have two positions. Not only that, if we do have the two positions, that will ameliorate, they will cancel one another out. But my suspicion is that one will go and one will stay, or one won't be bought at all. And that was my thinking. Now, the question comes up very often, how do you know these time things? To tell you the truth, I have no idea. It's just years and years of every single day, whether I'm here, whether I'm in the office, whether I'm doing an errand, I'm looking at my cell phone, looking at the chart formation, wherever I am, if I'm overseas, if I'm in Australia, I'll be looking as much as I can at the market intraday, and I have this thing where I try to guess exactly where the market will be at that particular time, not even having seen it. And then when I check, I like to see if I was accurate or not and what my thinking was. So I cannot tell you. It's just an accumulation of information. The Dow is down 45 at 18,117. The S&P is down 8 at 21.5. That's down 5 at 21.18. The comp index is down 8. You've got gold up 2. You've got crude oil down 33 cents. Bonds are down 9 ticks, and I'll be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we've got an important 5 minutes coming up. We'll be looking at things at 11:30. But in the meantime, I had a question, 2 questions. One is GoPro. I'll look at GoPro in a moment. Other one is, Basil, could you please revisit the chart on Apple? All right. It's showing a very interesting wedge formation. Also, I read the short interest has skyrocketed 26% in 2 weeks. This is rather staggering, given the enormous market cap of this stock. Oh, this is on Apple. It was on Apple. All right. Staggering, given the enormous market cap of this stock. Is this a telling sign of the whole market? Okay, I thought it was the stock market. So it's not down. Let me go to Apple. This is very interesting. I'll tell you why. I looked at this chart pattern, and I can't remember if it was yesterday or where. Oh, I know where it is. But now I've got to remember the stock. I've got the picture exactly in my mind. There was a breakout of a stock that was making this double cup formation, and it powered through, which is very unusual because this inverted H pattern, the soft W, lowercase w, very often gets repelled just at about the high. This is the weekly chart I'm looking at. It makes this, you could even draw sometimes a diagonal line from the previous high to the slightly higher new high. And at that point, you can expect that it's going to be like the lowercase h when you make a lower low. At a certain point, it's very negative unless you get a buy signal in the technicals, and that'll overcome it. And it says that the next move up is going to take It's going to take the price over the left side arch, a peak on the left side, the closest one. So here I am looking at the inverted apple. I could actually do that and turn it upside down, but I won't. So let me just answer the question. Patterns that replicate very often in all types of sectors. In other words, it's a pattern that becomes the pattern du jour. And I don't know what it is, I don't know why it is, but it's a pattern that says, within the context of whatever sector you're looking at, you could have a chart that is natural gas, let's say, and you could have a chart that is maybe IBM. And yet there's a pattern that repeats in the one, that is formed in the one, and then all of a sudden you see it repeating in the other. I don't know why that is, but I'd expect it as the same character, the same sector, the same type of stock, but not if it's different. So now Apple has this characteristic of trying to make this double or triple or quadruple top in the daily and the weekly chart. The way I'm looking at it right now, and I'm going to get to the answer to my answer to your question in a moment, and what I am going to say to you, Paul, is this. The 9-period exponential moving average at 128.78, let's call it 128 right now, is really important, because if Apple starts to close below it, what it will set up is a situation that says the upside is really limited to the last high of 134.54, which is only less than a point higher than the previous one back in February the week of the 27th, right? That's the way I'm looking at it. If perchance the cup formations that we've been seeing so often is telling us that you're going to have a chance to get to the left side high bar, and that's the high bar of 134.54, and I could actually draw in a left side, right side price time match, which says somewhere, it should be late, it should be by the first 2 to 3 sessions of next week, but only on condition that Apple by Monday is trading at 133.30. That's up almost 2 points from here. And that will start leg C. You get to leg C, this is a really good chance with a stochastic at 82%, MACD strong, that it'll go higher. But I'm being concerned with the lack of strength in the weekly chart. And the weekly chart's got the MACD negative, but not very negative. It's just that the 9-period differential is below the slow-moving average. The histogram is at minus 0.22. And the stochastic's at 71%. But the price action of the monthly is just stupendous. It is great. It says at a worst case basis, it could still test 118, which is the 9-period moving average. And the best case basis, it could break out and get to it's at 131. The last high was in the 134s. I think it could go to the 136s on a best case basis in the shorter term over 2-3 weeks. Now to answer your question. Short interest has skyrocketed 26% in 2 weeks. My contention is when I get a sell signal, and we'll be back, it's exactly 11:29. I needed another minute. I'll talk about it when we get back. I'll talk about Apple. I'll talk about the Dow when we get back. Well, this is going to be interesting. Be right back. Basil Chapman, Tiger Admissions Hour. Give me a call. Love to hear from you.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we're looking and talking about Apple. So what I was going to say, and I just started it, but I'm going to say it again. On those occasions where I've really been intent on shorting, when we've struck it correctly in the Chapman wave with preferably a peak F in the daily, 6 highest peak, and maybe an E or an F in the weekly, and a potential E or an F in the monthly so that I can get a potential hat trick top, it didn't matter if the short interest was very high. I'll tell you where I get very nervous if I'm short. One of the reasons why I don't mind shorting, I actually prefer if I could buy the long side of an ETF that is already formed with a conglomerate of short positions like the DOG is 100% short the Dow, etc. What I was thinking is, when I saw the question, is that what it does is two things. The one thing that I'm always nervous about if I am short a stock that's given me all the signals that I need and my subscribers need to go down, technically, based on my methodology, is that any kind of a bounce is not just a bounce. That's where you get squeezed by the shorts. So it isn't that it can't go down. After all, there were tons of stocks that were short back in 2009 and certainly in 2008, and they just kept going down and down and down. It's not the going down that is the issue. It is the speed and the velocity to the upside of the short covering. That's my analysis. That's what I always think of, number one. So you're not talking about shorting. You're just asking about the question of market participation. What does it mean? So what I'm saying to you is that Apple at this particular point with a stochastic at 82% and the MACD still strong in the daily, with the weekly kind of shaky, but the price way above 128.78, the 9-period moving average, at up 3 points above that. That's good. It's 2%, and acting well as we speak. And the monthly chart is still very good. It says that the rebound from the PKF doji top in the 120-minute chart was so strong yesterday that it's essentially corrected a chunk of what happened, but it's not over yet. Because by the end of the day into tomorrow, if there's a reversal back to the downside, or at least we're on the downside, back to the lows of the day and then down again tomorrow, that would be the negative action that would say, hey, watch out, bearish, much more bearish activity. That's bearish. The recovery right now is saying, no, there's still residual strength. I call it residual strength, meaning that it isn't internal strength that is so strong that this is the market I'm talking about, that everything, you've got leadership, you've got everything going for you, and every single decline is thought of as a buying opportunity. We're in a little different phase right now. We're in a bifurcated market, a mixed market, and the leadership is sparse. When I go through, let me just do this real quickly. GE is acting poorly right now. It's down 13 cents, not all that good. Did make a peak D in the daily, and that's one of my lead Dow indicators. IBM is acting okay. It's in a sideways consolidation after a really good move from 150 up to 174. And now it's digesting from the 200-period moving average resistance. Triple M, which had been a leader, is now kind of stalling. It's having a real tough time. It's struggling. It's making that H pattern we were talking about a little earlier. That was on page 337. I'll do it right now because if I don't, I'll forget. 337. Let me just hit 337 here. 337. Go. There it is. So here's the dreaded H pattern. You keep coming down. You try to rally. You take out the left side low. Come down. Take out the left side low. Arch formation. Arch formation. Finally, you make a low, and it looks like a good one, but it's just a larger arch formation. Look. There, dreaded H, we used to call them. There's the pattern. And then what happens is it goes to that. So that then goes to that, and that goes to that. So those H patterns are lethal. All right. So I want you to just show you that the pattern we're looking at here suggests that if there is a breakdown in the weekly chart of Triple M, that's going to give you that pattern. There's the first H, here's the second H in the weekly chart. That's not good. So one of the reasons why I've said to subscribe is we're getting real close to adding back to the short position. We just want to see how this plays out. UTX, nice day today. It's up 23 cents, but it's at a peak D in the daily. Weekly is peak D way at 124.45, and the monthly is still good, but not great. So you can see, and that's another pilot light indicator for me in my Dow stocks, more intermediate term than the short term of GE. So let's go back to Apple. So we're looking at Apple, and I'm looking at this inverted pattern, and it's saying that make it real easy. That if Apple at 131.62 in the next 2 days, no, by Tuesday afternoon at 4 o'clock's close, if Apple is under 129.50, it's not very far away, just 2 points. If it's under that, I'd say watch out to the Qs, the QQQ series, and watch out for Apple. That's number one. Number two is if it does that, it means that you got that 128.77. It's called a 128.50, 128. If you take that out by next week's close, not this Friday, but the following Friday, that says it's a failure pattern in the weekly chart. But it also says all you're doing is this rectangle formation is becoming more intense. From the top part, you go to the bottom part. From the bottom part, you can go back to the top. But the bottom part is at 120, between 121, 123. Hey, that's quite far away. So I'm going to say to you, I'm going to wait until I get all the little ducks in order. If I get a sell signal on Apple, I don't know if that's the one I would short. I'd probably be looking at the QQQ series. Okay, that's number one. And the answer to your question about the 25% short in this very short period of time in a huge market cap stock says just watch out for the bounces, so that you could be right on the short side, but you got to be careful for that reflex squeeze to the upside before it starts to come back down again. That's the issue with the heavy short position. But it is something to take note of, because it is a cushion in a sense, at least for now. So what you would really like to see, I don't know if the bears would like to see that, you would like to see that Apple spirals by a week from yesterday. Yesterday was Wednesday. Yeah. By next Wednesday, Thursday, the latest, you see Apple breaking to a new recovery high above 134.54. That'll be an all-time high. And if it does that, the shorts will be squeezed. And then after that, you might get a really good sell-off. But the sell-off might be to where we were just 3 days ago, down to 129. This is a tough period, because there's no other alternative to stocks. That's the reason why the stock market has been the venue, the place to go. I mean, it's just as simple as that. All the other techniques just fall by the wayside, because there is no place else for the majority of people to put their money. They're getting no interest. You could put it into housing. Housing is getting really, I'll be talking about housing over the coming weeks. And I had an email, I just can't remember, it was sent to me. Finally, we got a $500 million priced house, 500 million. I've got to find it somewhere. I got it while I was away this weekend, and I didn't have a chance to look at it. Now it's somewhere buried there. I'll find it. But amazing, $500 million this is a house. This is not an apartment building. So, okay, that's Apple. Now GoPro. GoPro is showing very good strength. Right now it's spiraled up 3.87 at 57.15 GPRO. And the monthly chart had a major high after it came out as an IPO down in the 20s and 30 area. And it went all the way to 98.47. In one leg up in October, it made its high of last year, plummeted down to 37.13, and it's trading right now at 57, 20 points higher. That is huge. Now, what I like about it is it's showing in that area. I call it the high-tech area. It's in the specialty area, but I'm calling it high-tech. And for now, what I'm looking at is you've got a cup formation, but it's really like a bowl formation. The longer you can take in the left side to the bottom, the plumb line is really there. The longer you can take, the better it is when you break out from the previous high. Well, there is no previous peak. The previous peak was at 55.17, and we're already trading above that. And that's above the 200-period moving average. So I would say that you're up in the 70 area. Let me just get rid of this Fibonacci expansion. There, that's better. Now I can see. At 69.75 back in December. But I'm going to say that the breakdown of the 200-period moving average right there at round number 60, 57.90, let's call it 58. 58 is really very close. Where the high today is 57.84. So this is an area you've got to watch up with the stochastics at 85%. The MACD is good in the daily. The weekly chart, well, it's got this Grand Canyon left side, the cliffs that it has to power above. So all I can say is, once again, you've got that 67 area as the left side high. But I'm just going to go step by step. There's a chance that you got a Chapman wave squash in the weekly chart. And that should take you to a very strong C, then a pullback, and then a D, and then you got to be careful. So all I can say is that I like it. If you're long GoPro, I say great. Keep your long position. A short-term position would say be prepared that you could fill the gap between 54. You could go all the way down to, if there is a pullback from here, it should not pull back below 56.20 to 55.30, and then try to make a new recovery high in the 57.89, right at that 200. No, that's a 200-period SMA, the smooth moving average. It hit it exactly. That's what fund managers will be looking at, and it got repelled from that level. My thinking here is that if you could keep your core position if you're in, I would add to it anywhere between 54.50 and 53.50, and I'd have a stop on that added position, a kind of a tight 1-point stop. but that's where I'd like to add to it. I think it's going to go higher. Now, if the general market by Tuesday is already turning down, Dow's down at 17,850, S&P's down 850. So the S&P's down at about 95, 93. Then you got to be careful. I don't know if I'd add to GoPro at that particular point. I'd just be protecting what I've got. But that's just if the Dow is able to make another leg up, INDU. It's got a long way to go. Oh, man, it's got a long way to go. It's at 18,111, and it's got to go all the way to 18,352, 240 points. Could do that in eye blink, but I don't know in these conditions. But anyway, that's what the Dow would have to be making. So I'm watching this real closely. And there you got your cup formation with a chance for a little handle right here in the Dow weekly. All of this, and look, there's the 200-period moving average. It's tested it. It's trying to move away from a very important couple of hours coming. So we're about to go to a break. We've got another few minutes. So that was GoPro. I did Apple, and the question about HQY came up. HQY don't have an H. Oh, HQY. QY. Do I have this notated? No, I don't. HQY is the Health Equity Inc. Oh, it's acting quite well. I've got an A on this one. I think it showed up in something else once before. So let me just see. So that's A, B, C. There's a little A. Oh, it's got a D. Okay, very good. The weekly chart has already made a D, and it's acting very well after the peak D. So I'll tell you exactly what this is that we're looking at. There's your D with a plus sign above it. Health Equity Inc., HQY, trading at 26.27, down 39. My only concern is that anything to do with healthcare, I don't know if this is going to be part of that business, but I've written a whole bunch. Stuck in a rectangle formation, watching the H pattern form over there. Oh, okay. So it broke out of the rectangle, spiraled higher. I'm going to call that a D, peak D right there. Good. Okay. The daily chart says rectangle formation acting very well. I'd just be nervous about it if you are long. I'd be nervous if it took out right there. If it took out 25.90 as support, then watch out because it'll come back and retest the rectangle base 25.22, 25.12. Okay? Now, on the upside, this rectangle formation says that watch the 120-minute chart because it's gone to an A-B failure, an A, B, C, D, and now you've got your pullback from peak D. If it can get to 26.55, it's at 26.30. Between now and tomorrow, that's going to be very important because, as I said before, this is a very I've just got there were so many 120-minute charts that I was looking at earlier last night and this morning that are saying they've made D, E's, or F, and that we should get some kind of a pullback after yesterday's big move. This is a really, really important period. So the healthcare, I don't know if this is in the healthcare area, but the healthcare area is trying to test, it's in the rectangle formation as well. A lot of these charts are making cup or rectangle formations. There's actually quite a difference between the rectangle, which takes time to consolidate, and the cup formation, which makes a very clear double top or breakout pattern. So I just say be a little bit careful there on the downside, but in the meantime, it's holding pretty well. This is A, B, C. We could still get a D in the daily XLV, which is the S&P Select Healthcare Spider Fund. We'll be back. Oh, now the Dow's down 80 at 18,082. S&P's down 9 at 21.14. What a fascinating session we've got here. I'll be right back. Basil Chapman, Tiger Technicians Hour.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Hi, folks. So we've got California Dreaming, record 500 million tag on LA Home. Thank you to Yo in the Den. Look at this. Let's see, Niall Niami, a film producer and speculative residential developer, is pouring concrete in LA's Bel Air neighborhood for a compound with a 74,000 square foot, that's 6,900 square meters for those of you in Europe, main residence and 3 smaller homes, according to city records. Oh, it has 3 smaller homes. The project will take at least 20 more months to complete, will exceed 100,000 square feet, including a 5,000 square foot master bedroom, a 30-car garage, and a Monaco-style casino. The house will have almost every amenity available in the world. He wrote in an email, the asking price will be $500 million. And there's the rendering. Oh, it's kind of a I happen to like modern houses. It's a very interesting house. Look at that. I love that waterfall stuff, that those swimming pools with the Where the water goes right to the edge. Anyway, so that's that. We're getting there. We're getting there. Will that be it, the major top coming? I don't think it's it. I still don't think so. I think that what we're looking at is a situation that says it is that we should have a pretty decent correction coming up sometime soon. But the real, whoops, we don't want to do that. Don't do that. Don't do that. Quit. Don't quit out. Oh, don't do it. Thank you. Whew. Save the day. Let me just quickly save this trade station. I do not want that to crash. Okay, so here we are. We've got the XLV, which says that there's a chance that it could go a little higher, above 75.50, to maybe, or even test the 76.01 all-time high, to make that leg D in the daily. It doesn't have to, because it's underneath the previous major high. So this is going to be very important. How do the sectors like healthcare, how does the IBB, we have no position in the IBB right now, we're looking to get a position, and we just missed yesterday. I wanted to buy the BIB for a fabulous move up. We missed it. We didn't miss it. I just didn't take it, or we did something else instead, which is still holding very well. But in the meantime, back at the ranch, what we're looking at is, in this particular context, do we have a situation where we've got that same rectangle formation trying to retest the top for another time in the IBB? How is this going to resolve by, let's call it, today's Thursday, Wednesday a week, Thursday a week, or even next Friday, a week from Friday? Do be resolved by seeing the IBB, the biotech iShares NASDAQ ETF, under 350, 357, trying to test the 355s, 9-period exponential moving average in the weekly chart, or have we broken above 374.97 for a leg, another leg to the upside, I'll call it E for now, and leg D finally in the monthly, and then we've got to be very, very careful. I think we're getting real close, but at 90% in the stochastic and the MACD really good, having held the 9-period moving average, I have to say the weight of the evidence, just like with Apple, is that there are certain sectors, certain stocks that still have enough residual strength to try to push higher, but their weekly charts are starting to suggest that this is a price move. Price is the arbiter of a trend, but you have to have the technicals, and I don't see the technicals in the weekly charts confirming these moves just at this time. And that would suggest to me that if there was a pullback below 355 in the IBB, it's showing at 364.27 right now. That's 355, 9 points. That's quite a move. But if there is a 9-point move to the downside in the next week or two, that will be a top of at least short to maybe intermediate term consequence, because the candle with the wick down in that May low of 330 will then become in force. So have a great day, folks. Larry won't be in. We'll be playing something else. But in the meantime, have a wonderful day. Larry did a show earlier on. You'll be able to hear it, did the 9 o'clock show. Thanks for being here. I'll be back tomorrow. Check out my opening call. You might find it very interesting, and I hope you do. Have a great day. I'll see you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.